with the business, I know it's kind of morphed since from before you've been involved. I'm not saying giving you plausible deniability here or anything, but it has morphed in the sense that it had this Turkish asset. We're now going to be focused on the US. It's a better jurisdiction, geopolitically, it's safer, and all of those things that people say. I mean, how much money's actually been pumped into the business, and how much has come out, and has there been?
Oh, those numbers are easy. They're
right.
Public.
Okay.
Right.
Yeah, no public. But
yeah. So, on the, do you want me to start with the production side of the industry? I could go all the way down from discovery since 1990 to anywhere you like.
As you say, it's all public. It's all there's a lot of numbers there, and I would rather you focused on where's the value coming from for shareholders, potential shareholders. Why should people be buying into this?
The actual exploration expenditures are down by 66% since 2012.
Mm-hmm.
Okay, so no money is going into the ground. On the production side of exploration, they shut down their exploration. Effectively, they're only looking for brownfield extensions of existing gold deposits that are in operation.
Mm-hmm.
And so they're not exploring, nor are they making discoveries. So the production's not drilling. The explorers were for a couple decades the supply chain of the future of the mining industry, and we're not exploring. There's only a few of us who can afford to explore, and those discoveries are few and far between. Like you don't see them anymore. And I think there was no 5 million ounce discoveries last year whatsoever. And every year the mine life of these producing mines are falling. Since 2012, the average mine life has gone from 15.7 to 12.4 years. And if we haven't explored for 7 years, and the permitting time on top of that, 10 years out, you might be seeing average mine lives around 7 years for the producers. And then then the oil price will logically go smoking. But it's all about funds. So if I was looking for funds now, and you can see it with a lot of majors, they're still taking equity interest in public companies, and a lot of juniors are continually going to juniors, to the producers, looking for them to invest. And there's private equity funds which sit on a fortune, and they're very, very conscious, and they're taking advantage of the people who are being crippled.
Yeah, but we hear that a lot, and that's
Mm-hmm.
part of the pitch for explorers. They talk about this deficit, and in fact, investment going. We know
Mm-hmm.
that. What I guess people want to understand is how you're going to actually deliver that. So we've heard you've got a exploration team, been together 14 years, some
Mm-hmm.
Big discoveries there, responsible for a lot of ounces out there. What gives you encouragement, and I know you have got encouragement because you're putting your own money into this thing regularly.
Yeah, sure.
What encourages you to believe that these assets, these 6 assets, are going to be able to deliver those ounces?
Well, we've already got 1.2 million ounces
Right.
at Goldstrike. Okay.
Which is a good starting point.
It's a good starting point. But that needs to get to 2 million ounces. So it's now being drilled to get to 2 million ounces. So when we did a PEA on that, we released it last year.
Is that across how many assets?
That's just one project.
That's just on Goldstrike.
Just on Goldstrike right now.
Okay.
So
Right.
we did a PEA on it, and there's a good PEA and a crap PEA. We both know that. You can do a PEA in 40
Big
drill
variance.
holes.
Yeah.
It's like whimsy in some cases. You have to really understand what you're doing.
Yeah.
So in that PEA, because of the way our geologists operate and they do their compilation work, that had 1,700 drill holes in it. Mm-hmm. That's a good PEA. Mm-hmm. And 75% of that resource was measured and indicated. Mm-hmm. And that's 3 holes within 50 meters of each other, within 50 meters. That's how tightly drilled that density is. Mm-hmm. And to do a pre-feas, you have to have measured and indicated. So we're 3/4 of the way through that on that deposit. Right. That's how prepared we are to deliver, right?
When do you get to the end point there?
To the end point, well, we've only drilled 30% of the target.
30%. So what's the timeline on that?
Oh, it's just money. It's money driven and drill holes. It's cheap to drill because they're short holes and they're RC holes, right? And their permit allows us to go wherever we want. So we can drill some days 2 drill holes in one day, and we pay by the hour.
Right.
So your drill costs are going down, and it's the same geological costs and management costs are on that, and the assay cost is a fixed number. So on that PEA, the after-tax IRR, I think it was at $1,300 gold, was 29.4%. But we excluded byproduct silver, which historically the mine produced an ounce of silver for every ounce of gold. So that would have popped the after-tax IRR by maybe 1.5 points.
Right.
We excluded the heap leach pads, which we've drilled. We have the permit to perforate the liners of the heaps. And there's 8.1 million stacked tons there, but the grade on those stacked tons is twice our cutoff grade. So you could crush that heap leach pad and put it as the base of your new heaps, and you're going to get more ounces. And the average recovery on that mine was 75%. And we've done our metallurgy on it, and we're just about finished our second round, so that news will come out soon.
Right.
And we get 80% of a recoverable cyanide leachable gold in 8 days. It's the best in the Great Basin.
Right.
So if people don't understand what a heap leach operation is, it's like a quarry.
Right. So you're just moving large amounts of earth,
Yeah.
processing it, and you've hopefully got some gold at the end of it. So what's a grade? There's a low grade, high volume.
Yeah, sure. I can give you the numbers for the
Yeah.
for the big producers in the Great Basin. The average grade is 0.53 grams for a run-of-mine heap leach. Ours is 0.48.
Okay, so you're there.
Okay.
Yeah.
Their recoveries average 70.53. Ours are 78%.
Okay.
But ours isn't 78%. And I'll tell you why, because they rinsed the heap leaches for 3 years after that mine shut down,
Right.
and produced 45,000 more ounces.
Right.
So that's real recovery. It's 75 plus the 45 on a percentage basis, which takes you over 80%. It's just a unique deposit that leaches like a dam.
Right. Okay. Understood.
So we need to take it to 2 million ounces, which gives you, right now I think it's a 7.5-year mine life excluding last year's drilling at 95,000 ounces of gold a year. So the target has to be 100,000 ounces, which meets the base for an intermediate gold producer for one mine, because we're certainly not going to drill something for a 30,000 ounce producer. That's just a waste of our time, right? It's like a hobby if you're going to go down the food chain that low. And then it goes up to 95,000 ounces, right? So we want to take it up to 100,000 and 10 to 12-year mine life, which solves the problem of a producer with declining mine lives with no exploration.
So you're saying there's a fairly easy business, really.
Oh, it's really easy.
You're just moving large volumes of earth efficiently, cheaply as possible. You've, say 0.5 grade, slightly under. It's just a numbers game for you. Is that?
Oh, well, it's easy. I mean, if you go look, I'm not sure if you can see that behind me, but the credenza is about 12 cubic feet here. That's a ton. That's what a ton of rock looks like if you wanted to model it in 3D. But it's the strip ratio is everything.
Right, exactly.
Right, because of, and the metallurgy. So if the cash flow is quick and the strip ratio is 1.2 to 1 and it costs you $1.80 to move a ton of waste and $1 to move a ton of ore because it's got to be drilled differently, and you take the grade and then say it's $22 rock and you're going to get 80% out of it, so you might get $18 rock, and if all your handling costs and processing costs are $10 or $8 or $9, that's your profit on 75 million tons.
That's what I'm getting at. I was asking you,
Very easy.
Why should people believe you guys can do this? Because it's an easy, well-trodden path. You're really just dependent on the grades continuing.
Yeah, but we've done it before. We've built a mine before.
Right.
In Africa, in Burkina Faso. We know how to build it. We have to de-risk it, build it, and sell it, or de-risk it and sell it.
Okay.
Right? It's just a very, very simple process.
Okay, so I think that answers the question. So if that's the case, so where's the value coming in? What do you? I mean, obviously we've got a potential sale coming down the line. There's a bit of cash, but that's going to go straight back in the ground. Yeah, so there's no real upside there for existing shareholders or new shareholders.
The upside is their shareholder base stays exactly the same with no dilution. It's a massive upside.
Massive. Okay, I'll buy that. So going forward, where's the other value coming from?
The other value is probably the Black Pine project.
Right.
Which is now leapt in front of Goldstrike because of what we found.
But okay, at the moment you've got $7 million of cash. So when you say leapt in front, how does that cash distribution or allocation?
More money is being spent drilling Black Pine this year than Goldstrike.
How much?
Oh, it'll be about probably 30% more based on the budget.
30% more. Okay.
Yeah.
Right, and we know your $7 million is going to get you.
Yeah, we just started drilling it a week ago.
Right.
But it's unique. We found something we never expected we would when we bought it. What was there when we found out?
Tell me.
I can tell you what's there.
Okay,
sure.
go on then.
Yeah, because we bought a past producing mine. It was the old Pegasus mine. It shut down in '97.
Right.
It stacked 685,000 ounces, produced 435,000 ounces of gold from 5 aggregate pits. And we bought it with 560 drill holes in the database with the recognition that we didn't have the data, we had to start from zero.
So what value did you put on that then?
Well, we bought it for $1 million in aggregate, yeah.
What do you think that looks like on your books now?
It looks substantially
more. We're hoping.
More, yeah.
Right. Okay.
Okay.
So you got to spend a bit more money on it this year, and you think that
we just spent 18 months. We went in. Our geologists found the data.
Right.
In a Forest Services file that the vendor did not know they had, and in that Forest Service file was 1,875 drill holes. Every blast hole, every soil sample, all the geophysics, all the cyanide soluble assays, absolutely everything.
Mm-hmm.
Took 18 months to put it together and get it permitted.
Mm-hmm.
And we came up with a model on it that we were sitting on something, and we published a 2 to 4 million ounce target on that. And at this point, where we're sitting, based on our valuations, we think that could be conservative.
Okay.
And it's the largest unmined oxide gold system left in the Great Basin. And I'm not exaggerating. We've defined 12 square kilometers of exposed oxide gold at surface.
Okay.
Okay? And so the average depth of the historical pits was 100 meters, and there's not a drop of water in those pits.
Okay.
The drainage, groundwater, any groundwater that's there, flows into the dry part of the Great Salt Lake. There's not a fish on that side in a dry salt lake. There's no environmental issue. There's road, there's power, there's water to site. Okay? So we applied for the plan of operations, and we have the right to go anywhere we like and drill where we like over 7.3 square kilometers of oxide.
Right.
So in the modeling of the entire project, after all this work, we twinned a historical drill hole. And the holes, 95% of those holes only go down to 300 feet or 93 odd meters. And our belief was there's a high grade portion at depth based on all of our modeling. And so we twinned a hole in late 2017, and it was 40 meters of 0.5 grams, and then there was a gap, and then there was 5 meters of 1 gram gold of oxide, and it stopped in oxide because the drill, those days the miners were shut down, and it just says stopped in ore. So we twinned it, and we hit 40 meters of 0.58, then the gap because there was a calcite breccia in there, and then we hit 15 meters of 1.2 grams, and then we hit another calcite breccia, and to the bottom of the system we hit 77 meters of 1.49 grams oxide.
Okay.
Okay, so whopping grades, but in a 200 meter hole, 132 meters ran over ground on average. You don't see that in the Great Basin. So we now know that the target depth that it has to be drilled to, depending on where you are and where you're exposed in the rocks on surface, over that massive 12 square kilometer area, is between 150 meters to 350 meters to get to the base of the system. And there's no sulfides in that system whatsoever.
Okay.
It's all oxide. We haven't seen one like this in a long, long time that's this big.
I mean, that doesn't seem very big to me. So what does it mean in real terms?
In real terms, a kilometer by a kilometer by 100 meters.
Right.
Aggregate with a specific gravity of 2.56 means you've got potential for 256 million tons.
Right.
And if it runs a half a gram, you've got 128 million grams.
Right, okay.
Divide that by 31.18 grams and you're over 4 million ounces, and that's a square kilometer of a 12 kilometer drill confirmed oxide system.
Okay. And obviously no sense of the economics on that at the moment, only indicative.
No, but we have our own internal models, which I won't give you how many ounces we're starting with without drilling.
Right.
But I would say it's substantial.
So that's Black Pine. You're going to spend more money on that than Goldstrike.
Because it's too big.
Because it's
too big and it's got whopping grades in it.
Right, okay. So I guess what I'm trying to say is, how do you get to what happens if things don't kind of go well? I guess would you then flip these assets out somewhere else? If you don't do it? You think you've got enough data now to say this is the company, not company maker, I guess is a fair phrase. Yeah? Okay. What are you doing with Kingsley, Baxter Springs?
Kingsley, we spend $500,000 on it a year with our partners on a contractual.
You're required to spend that amount.
Required to spend that,
right.
And we do spend that. And Baxter Springs just sits there, gathering dust because we don't have time to get to it.
But you're not going to offload it?
No, it costs nothing to keep it in good standing. It's nothing.
Right.
And Griffin is the same thing. We keep that in good standing.
Right.
And we'll look at, once we figure out the rawhide royalty, whether we want to monetize that for extra cash or not.
Right.
Right. And so we're just analyzing what that's worth right now. We're not there yet. We're
So
dealing.
it seems to me you are dependent on offloading Turkey.
No,
You'd say
I'm not
no,
dependent on anything.
because you think you can go to market.
I can
raise
get
the cash
market. I can get
you
it
need.
corporately, and I can get it from royalty companies. I can get it from wherever I want. It's just the timing of when I want to do it.
Well, and the cost, I guess, you'd have to do the economics around what that's going to cost you now compared to what you actually
Mhm.
want to pay, yeah? So therefore, Turkey's the ideal solution, maybe not dependent.
Oh, it's easy out.
It's the easy out. And that will give you the cash you need to kind of move those two assets,
Mm-hmm.
being Goldstrike and Black Pine, where you need it to be,
Yeah.
to go and raise cheaper money at some point in the future.
No, I don't think if things go the way we hope, we may never have to raise money again.
Okay, that's
I think
pretty
I
interesting.
think you can de-risk. Well, Goldstrike is de-risked. It's just mine
Do
life
you mean-
in
you mean
ounces.
by money-
But Black Pine as well.
You mean money, or do you mean equity, or do you mean don't even need debt?
No.
At some point, you're going to need debt to.
If you're going to build it,
build it then.
if you're going to build it, you always need
But you
debt.
think
You'd be looking at a 30% equity versus debt scenario. Because these things are cheap to build, right? You know,
Right.
to get the same amount of ounces out of an underground mine in Canada, it's going to cost you 6-7 times the capex to build it.
Right.
Heap leach mines are dirt cheap to build. It costs you 100 to 150 million US,
sure.
and you pay it back off if you've got starter pit material, which we have at Goldstrike, and we're sure we have it at
Yeah.
Black Pine. And then your capex is paid for, and you're good to go.
So that's really interesting for shareholders.
Sure,
Or
well,
potential shareholders.
Because now that the Barrick joint venture with Newmont is done, Barrick's got Nevada,
Yeah.
right? So Newmont and other people who want to get into the Great Basin, they've got to go into Idaho and Utah.
Yeah.
And we've been tying up Idaho and Utah now for years,
Yeah.
right? And so that's why we acquire them, and we just hold on to them.
That's interesting.
Yeah, it was a plan set out several years ago.
Okay.
Given the case of the gold market and analyzing all countries around the world, Africa, wherever, and they fall. Like Libya just fell the other day. You're not going to Libya. You're not going to Algeria. Nicaragua's got problems with the Sandinistas, right? Guatemala's got issues, and parts of Mexico have issues. So effectively, government changes, military coups, whatever you want to say, and countries that have no money want to take it from the operating mines. The balance sheets are affected by these producers. So we just went and said, okay, we're going to zero in on safety.
That's really interesting.
Years ago.
That's really interesting. So a couple of years ago, 2-3 years ago, you decided, well, when you joined, I guess, you're saying, right, we need to get back to sacred jurisdiction. The strategy will be this. We feel that. I mean, does this have any bearing on Trump coming in here? Because he's obviously pro mining, right?
Mhm.
I think he's been good for a lot of people in the region. Was that part of your process or part of your thinking back then? Or was
No.
it just purely, let's get back to the States where we know what we're doing?
We just went to the jurisdiction. It didn't make
Right.
any difference who was sitting in the throne.
Right.
It didn't make any difference at all.